Today, we saw the S&P 500 squeezing up towards that 38% retracement along with the NASDAQ. However, the NASDAQ has a lot further to go, and now there's a new Trump stock market threat we're going to discuss here in just a few moments. Now, when we come over and look at the fear and greed index, we are still within extreme fear. We have a reading of 22. Now, when we come over and look at how the indices fared across the board, the Dow was up 353 points. NASDAQ was up 54 points. S&P 500 up 36 points, with the Russell 2000 being up 2.4. However, look at advancing issues versus declining. We had 78.4% of issues advancing on the day. And we look at the sectors across the board, every single sector was in the green, and that's something we were talking about today on the live stream. If you look at SPY, SPY is up 0.74%, but then we look at RSP, the equal weight S&P 500, up 1.33%. So if we look at one of the drags out here in the market, and we come over and we look at the Mag 7 stocks, Apple, Nvidia, Meta, Microsoft, Google, Tesla, and Amazon, notice only Microsoft and Apple were actually in the green today. Every other Mag 7 stock was in the red. Now we come over and look at Trump news affecting the stock market. Trump says no exemptions on steel, aluminum tariffs. More are coming. However, when this came out today, Trump says Iran will be responsible for every Houthi fired shot. And let's look at what the market did when he came out with that announcement. On the left, we take a look at crude oil. Crude oil went rocketing up. Then at that same point, we look at the S&P. S&P came on the move lower. However, the S&P was able to recover. Now we look at the news that we had to come out today. Retail sales did not come out all that great. 0.2 versus 0.6, previously 1.2. Empire State Manufacturing was horrible. Tomorrow, no major economic news to report on. However, if we come over and look at Wednesday, it's going to be a big one out there. We have the FOMC. Jay Powell is going to be taking the podium, and we're going to see, can Jay Powell move the markets as much as Trump has been doing out here this year? Now, if we come over and look at what the market is anticipating when Jay Powell takes the podium, notice right here, if he is hawkish, we expect stocks to go down, dollar to go up, and yields to go up. If it's in line, everything is basically sideways. And if Jay Powell comes out dovish, we're going to see stocks exploding to the upside, dollar and yields on the way back down. Now, keep in mind, Trump does want to see yields lower. When we come over and look at the dollar index was on the move lower, threatening breaking below this recent swing point that we've had. Then we come over and look at yields. Yields basically consolidating down here at these lower levels. Is this part of a bear flag that's going to resolve itself to the downside? We come over and take a look at the precious metal gold, and gold today closing with a bullish candle up 8.9. And on Friday, we had that doji candle. So are we going to see gold continue to rally up higher with more and more uncertainty out here in these markets? So as we come over and look at the SPY chart real quick, notice we're getting closer towards that 38% retracement. And in Sunday's video, I warned you guys about, could we see a double trap? One, where the lower level shorts are trapped and they rally them up, squeeze them up a little bit, and we get somewhere between the 38 and 50% retracement. And then they go ahead, we get a knee-jerk reaction, rug pull, all the way back down, either forming a double bottom or potentially going even lower. Now, I'm not saying that's going to happen this week. I'm not saying we're going to come up here and then boom, be all the way down there. But with the economic data that we have coming out on Wednesday, we very well could see some crazy moves in this market. On the 4-hour chart, MACD indicator is crossed to the upside. However, are we going to be able to fill this gap? We have not filled that gap yet. On the 30-minute chart, notice we had that gap from Friday, but then today, notice what the MACD indicator, at the end of the day, MACD indicator is trying to come together and kiss here just a bit. Are we about to see some selling out here tomorrow? As we saw the SPY today basically come right up here towards gap resistance and then reject and start coming back down. Now, if we do come back up and start threatening the highs from today, then I would expect the SPY to come all the way up here, fill in the first gap. Then I'd want to turn my attention up here towards the second gap at about 583.10. Now I want to remind everybody right now, Apex having a 71% sale off all their evaluation accounts, passing as little as 1 day, and the 250, 300K accounts are the same price as a 50K account with only an $85 activation fee on those two account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. When we come over here and we start looking at the futures markets real quick, notice this is something we're talking about today on the live stream. And if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. We're going to be giving away 2 Take Profit Trader accounts this week on the live streams. So again, make sure you are subscribed and you have the bell notifications turned on for all. Now, as we come over and we look, we grab our fib from the high over here in mid-February all the way down to the recent low from last week. And we look at the 38% level, notice right where it comes very close towards the composite profiles point of control, another high volume node. Now, the question I'm asking myself is, do we pull back a little bit before running up there? You can also see that we are forming an A to B equals C to D pattern off this low. Here would be the A to B leg. The B to C leg would be the corrective leg, and the target on that comes in about 57.92. Now, that is a little bit shy of that 38% retracement and that high volume node, but I still think that's going to be a logical target. Now, when we look at this last candle on the 4-hour chart, not the most bullish of looking candles. We have quite a wick on top of that candle. Then as we start diving down and looking at the daily profiles, notice what we talked about in Sunday's video. That was this minus development area off Friday's profile. I said, watch for the market to potentially come down to there, and we'll see if we get a rejection up and out. And that's exactly what transpired. This afternoon on the live stream, we also talked about this A to B equals C to D pattern, which actually completed after the live stream at 57.48. Market goes a little bit higher and then starts to pull back. Now, as I'm starting to look at today's profile and say, okay, where do I want to be gunning for? Well, some of the areas I want to focus on are going to be the minus development areas within the profile, but along with the high volume areas as well. Now, if we're going to start to pull back, I want to pull fibs from a couple different locations. One from the overnight low up towards the high. We know the S&P 500 loves to retrace the 50% level. That would bring us all the way down towards 57.05. So I'm going to be looking for that level out here tonight. And then does that level hold? Do we come down to that level and then basically rocket on the way back up, setting up a much larger ABC pattern on the way up? Now, ideally, if I want to get long, I would prefer to see the market go ahead and melt down below 57.05, which is value area low, and then start to come back up. I want to then target the point of control. I then want to target value area high. Then anything above and beyond value area high, that's when I want to turn my attention right over here to the 4-hour A to B equals C to D pattern at about 57.92. Then maybe hold a runner out a little bit longer, see if we can push towards the high volume area right here on the profile, 38% retracement, or maybe even hold for a little bit deeper of a retracement back up, somewhere towards the 50% Fibonacci level. Now, when we come over and start looking at the QQQs real quick, notice we have quite a wick on the top of this candle. MACD on the daily chart is not cross bullish yet. However, I do think at some point we will test this 38% retracement. The only question I'm asking myself is, do we come back down sweeping the lows first before making a run up towards that area? On the 4-hour chart, MACD indicator is crossed to the upside. So if we're going to start to pull back here, what I want to do is grab my Fibonacci retracement tool, measure swing low up here to today's high. Now notice anywhere between the 50 and 61.8 level would be my ideal retracement level. So that'd be 476.21 down here to about 473.83. We come over and we start looking at the 30-minute profiles. Notice towards the end of the day, we started to sell off here just a bit. Now there's a couple different areas we can look for retracements out here. One from the low of today up here towards the high. Notice we pulled back right to the 38% level. Are we going to make it towards the 50 or 61.8? If we make it to the 78.6, expect the low from today to be taken out. And then really we're in the jeopardy of coming all the way down here towards gap support at 473.11. We break below that, then look for the gap to potentially come all the way back and get filled at 468.32. MACD indicator is starting to show a little bit of signs of weakness on this 30-minute chart. And then as we come over and look at the futures markets real quick, which before we go over the NASDAQ chart, I want to remind you guys of something really quick, and that is the fact that we are in contract rollover. And this is something we talked about on the live stream quite a bit as well. But let's look at where the volume lies now. We can see the June contract now had more volume by the end of the day than the March contract. This is a big telltale. We want to be trading the June contract. And that's for the S&P 500. Now, if we come over real quick and look at the NASDAQ, let's just check out the volumes real quick. The NASDAQ was lagging behind for quite a while. And we can see the NASDAQ today, the actual March contract still had more volume on it than the June contract. However, I do not think that is likely going to be the case out here tomorrow. Now, as we come back over and we look at the 4-hour chart, you can see we've had this push up, and I want to remind you guys of this double bottom pattern we have in play. That target is going to be about 20,647. And that target also correlates right around this high volume area of the composite profile. Now, the last 4-hour candle, not looking the most bullish of candles out here. And notice right below us, we do have a high volume node sticking out like a sore thumb. Are we about to go back down there tonight or even tomorrow? Then as we come over and start looking at the 30-minute profiles, we can see we had that push up and we came right back down to that structure breakout point, which is similar to one of the trades I took earlier this morning on the live stream. Now, as we look at this right now, we are currently trading below value area low. Now you can see the point of control is very close towards value area low as well, but I do think there's a high probability that we will come back down and test this point of control out here tonight, tomorrow, whatever the case may be, about 18,898. Now, if we start breaking below that, that's going to really put the low of today in jeopardy of a retest. We start breaking below that, then I'm going to be scratching my head saying, all right, are we about to undo everything we did today and from Friday, which would also correlate with the QQQs coming all the way down and filling the gap? Now, if you guys like to see which prop firm is best, Apex Trader Funding or Take Profit Trader, make sure to watch this video right here.